Hey everybody, here is problem 16 from the week 2 quiz access, chapters 1 and 12. Um, anyway, so this is just meant to kind of show us the relationship between the statement of retained earnings and the balance sheet. So they want us to prepare a year-end statement of retained earnings and then use the information to do the balance sheet. I noticed they called it Mahomes Company, so I'm guessing they're Kansas City people, but I don't know for sure. Anyway, so let's just take a look at it and see if we can figure it out. So they reported the following data on the end of its first year of operations. So when it's the first year of operations, we can know that the retained earnings at the beginning of the year are zero. Because retained earnings is any profit made in previous periods, any net income made in previous periods, minus any dividends paid in previous periods. So if it's brand new, there were no profits or dividends. So we can start there. And then we always add the net income. And it tells us the net income was $62,000. And then we'll subtract the dividends. It tells us the dividends are 24,000. And so our retained earnings at the end of the period, as of December 31st, will be $38,000. So all retained earnings means is the earnings, which is the revenue minus the expenses or the net income, minus any dividends, money paid out to the owners. And that's what retained earnings is. So we'll check it just to make sure. Looks like we're all good. So now we'll move on to the second part, and we'll have to remember that our retained earnings is 38,000. So the second part is going to ask us to do a balance sheet, and a balance sheet always summarizes, if it's going to let me type in here. Oh, sorry, when you check it, it's won't let you. So, all right. So it's going to summarize our assets, our liabilities, and our equity. Remember, assets are things the business owns. So in this case, it's going to be our cash, our accounts receivable, our equipment, and our land. The liabilities is money that we owe, so that's going to be our accounts payable. Looks like that's the only liability we have. And then in our equity, we'll have common stock. That's money that the business owners have put into the business, and retained earnings. So we can just pull those amounts off. Cash was 8,000. Accounts receivable, 9,000. Equipment, 11,000. And land, 40,000. There's our total assets. Our accounts payable was 5,000. Our common stock or money put into the business by the owners, 25,000. And our retained earnings, which I already forgot. I'll have to go back and look. It was 38,000. Oh, 38,000. There we go. And there we go. We'll probably also want to have a label here, which will be like our total equity. And one here, which is like our total assets. And then this will be the total of our liabilities and equity. There we go. We can check our work and see that we got them all right. So I hope that's helpful to you. What they're really trying to show us is this link that our retained earnings is going to flow into the retained earnings slot here in the equity section of the balance sheet. And if we'd had an income statement, we would have seen that our revenue minus expenses equals net income, and that the net income flows into this add net income spot here. So that's what they're trying to show us, is there's this interconnection between the sheets, between the income statement and then the statement of retained earnings and then the balance sheet. Anyway, hope that was helpful. If it was helpful to you, don't be afraid to like or share. And again, that's how we get people to see, yeah, or subscribe even. That's how we get people to see this. And I'm finding that people at other colleges outside of BYU, Idaho, also find these problems helpful because I guess their college is using the same text. Anyway, have a great day. And if you ever have questions, don't be afraid to put them down in the comments.